Hi, this is George Sandman. I'm the founder and CEO of Growth Drive. Growth Drive is the number one best-selling business advising platform, and this is our podcast, the Business Advisor Hot Seat. Now, in the hot seat, you're going to hear from industry leaders, thought leaders, your colleagues who are going to share tips, techniques, war stories about building a thriving advisory business based on delivering client wins. We're going to get into it. We'll get into it about the Growth Drive methodology, the Clarity software, what we see out in the world, so much more than just the system. And I'm also the author of The Growth Driving Advisor, which is based on over a decade of being an advisor to advisor, working with you and your colleagues, helping them build their practices, helping them through client engagements. And it's really proven strategies for leading businesses from stuck to best in class. Check it out. So strap in. We're going to light this up. Here we go. This episode is brought to you by the Growth Drive Summit. Our theme this year is building a profitable advisory business. Join us in Charleston, South Carolina, October 6th, 7th, and 8th. Expand your network, learn new skills, and generally have a good time. This is a top-rated event. We're looking forward to seeing you there. Thank you. My guest this week is Carl J. Cox. Now, Carl's been on the show before. He's the author of Lost at CEO, An Entrepreneur's Guide to Strategy. And importantly, Carl is the founder of both 40 Strategy, a strategy consulting firm, and 40 Accounting, a strategic, emphasize, accounting firm. Carl and I are going to get into it about the synergy between these two opportunities. Now, listen, those of you running CPA firms out there, CPAs interested in expanding your reach and relevance, listen up. This podcast is for you. Let's go. Okay. Well, welcome, ladies and gentlemen, and we are here in the hot seat with Carl Cox. Carl, I think this is your second time here on the show, so thanks a lot for coming back. And you and I were having a conversation here about a week ago, and we were talking about your new venture, your additional venture, 40 Accounting, that is a sister company with 40 Strategy. And you shared a couple of things, and I said, hey, man, we have got to get this on tape. So welcome. Thank you. And actually, we were just talking in the proverbial green room. Do you mind starting with this story you just shared?
Yeah, absolutely. So literally this morning, talking with a prospect who had got referred to us, and they said something very interesting. They said, Carl, we've got a pretty good CPA, but they don't look ahead. They aren't looking forward, and they are not our strategic partner. We're looking for somebody who can help be with us to not only figure out the facts, but to help us figure out what decisions we should be making going forward.
Yes. I love that. I love that. You should see some of the emails I send to the managing partners of CPA firms. They're very nice. They're very cordial, but I'm like, man, it's a desert out there. And if you were you to focus on this, you would have an almost unfair competitive advantage. So Carl, maybe just a little bit of background. I love that. Thanks for sharing that. A little bit of background. Can you just, who you are? You have a great book out there, Lost at CEO, that is part of the C3D certification for advisors. It's part of the course materials. So a little bit about you and why clients hire you. And I think you just told us. Go ahead.
Yeah. So Ed, thank you so much. And once again, it's a privilege, honor, George, to be with you, be part of the Growth Drive organization. And it's, once again, your tool has been wonderful for us to help continue our ability to be strategic with our clients. So that's been amazing. Once again, I use the name Carl J. Cox just because there's a DJ that has my same name who I'm not him. So we use Carl J. Cox. And but what I have two firms. One is a strategy firm, and that's where we have had connection with. And really the past 15 years, I've helped companies within and externally to not only get strategies done, but design it right in the first place. So when you design it right in the first place, then it's much more easy to execute and go through that process. And that's what we outline in the book, Lost at CEO, An Entrepreneur's Guide to Strategy. It goes through this process of there's a better way, a better way to be more effective. But my true original calling as a CPA, I started out at Coopers and Lybrand, for those who remember that name, which is Price Waterhouse Coopers. And And I started as a bean counter many, many years ago, and went that process, became a CPA, and then I ended up joining multiple private companies, worked with a publicly traded company for 5 years. And then I was fortunate enough to be a CFO by the age of 30 and helped the company triple in size in 5 years. And then I was with another company, came into the finance person. And by the way, I didn't share, I also learned a lot of operations along the way. And through that process, we ended up growing another company from basically 25 million to almost 100 million in sales in 3 years. And then I opened up the U.S. office for Strategic Cascade Strategy, which is a strategic planning software company. We grew that from, it depends how you count it, but basically became a very small percentage of the global sales to 50% of the global sales in 3 years. And so we had really good successes through that. What's interesting is when I opened up 40 Strategy, George, I very intentionally, very, very intentionally did not want to be called a CPA. And the reason is because when they think of a CPA, what do you think of? I mean, let me just ask you, George, when you think of a CPA, what do you think of?
Tax person.
Thank you. That's right. You think of taxes. And what is taxes? It's the past. It's filing your tax return for last year. It's, and then if you think of a other type of CPA, maybe perhaps they're working in industry, they're doing your financial statements of the past, right? We rarely will talk to a CPA about even creating a budget. We don't feel like, right? Because we don't even think they have that skill set. And the problem though is, and it's a big reason, look, accountants have been trained nothing but the facts. It's like Joe Friday from Dragnet.
Yeah.
Their goal, and they're a great group of people, high integrity, trustworthy people. You can trust a CPA. It's a part of our DNA that they're going to get the books done. They're going to get things right. But because they're
hardworking and of average, the average intelligence of CPAs is through the roof.
Yeah, it truly is a remarkable profession, right? But when it comes to, but the problem is they're looking in the rearview mirror. Their whole life is making sure the past is true, because that's what they get in trouble for if it's not true. Mm-hmm. So that's where they spend their life figuring that out. But the problem is very, very few look in the forward mirror. They're always looking in the rearview mirror. They're not looking ahead through the windshield and going, where are we going next?
That's right. Yeah.
And so,
I'm
go
sorry.
ahead. No. And so,
teasing.
Yeah, please. No, go ahead. You go, George.
I'm just going to, a small point. I think what you're teasing out is the difference between an accountant and a fractional CFO. A fractional CFO is a C role, the strategic role, looking forward, and the accountant is looking in the rearview mirror. And there's a happy medium there, but so sorry, I didn't mean to interrupt.
Well, no, you nailed it. And so that's, what I didn't mention, George, is I used to have a different CPA firm in the past. And I had that CPA firm because I actually was going to be a teacher and coach high school football. And so it was going to supplement my income. And so I built up this business and was moonlighting this and growing it. And I found out, I was shocked because I came from the audit side. I found out how much people loved you doing their taxes because there was so much fear around taxes. And so we grew this business, very healthy business. But I got these opportunities traveling around the world and being in business where it just didn't make sense. But boy, if I knew what I knew now, I would have never sold that business. And what I didn't know is what's happening today. Even if you do have a great CPA who can look forward, they're too busy. There's a significant shortage, due to basically baby boomers are retired. It's harder to get an accounting degree than it used to in the past. And so as a result of this massive shortage, people are lucky to even find a CPA that could do their books and do the past, right? Literally, I just talked to somebody last week where the firms are basically firing the bottom 10% of their clients because they can, and they can't, and they don't have enough time. So what we've done with this firm is we built it the right way. It's about serving the client's needs, not my needs. It isn't about me making sure I'm trying to take care of a $500,000 partner pension, right? I built this with variable cost and very little fixed costs. And so we have a great team where we do the whole package, right? Yes, we do the compliance that everybody needs to get done, making sure you got clean books, making sure you got taxes done right. But more importantly, what we're doing is exactly what you said. We have the ability to do accounting manager, controller type work up to CFO work. We can help you understand what does the future look like. And so you can actually do these hypothetical situations. What if? Yeah. What if we make this decision? What if this happens? And then how does it play out? I literally was talking with a firm that after that call I had that was mentioned earlier about the prospect, I literally was talking with the client about that exact same thing. What if? What is the impact of tariffs? Right? That's very real right now, right? What is the impact of potentially going 3PL? What is the impact of changing our manufacturing to a different country, right? What is the impact of onshoring versus offshoring? These are the questions that business owners need to know, and they need to know it now, right?
Right now, yeah.
Right.
Especially right now for so many reasons. Yeah.
Yeah. But then there's also hey, when we move forward, like it's crazy, George, and you know the data. I mean, less than a third, it's close to 20% of actual strategic plans are included in the budget, which means it doesn't get paid for.
That's right. Yep. And we see it all the time. Yeah, or the budget is viewed as a strategic plan, which is sort of a unrelated, but
boy, what a mistake. What a mistake. I mean, I'm a huge fan of creating budgets and comparing to actuals. But folks, that's just one indicator. Like if you aren't rolling forward and updating your forecast and looking at trailing 12-month information to see where you're really going, you're missing how much. Just look at 2025, the year this podcast is being recorded. People came in. Once again, I'm politically neutral, right? But let's just, I think overall business owners were relatively optimistic of a pro-business administration. And I think they also were hoping for interest rates to decline. What has happened? Interest rates are not expected to decline at the rates they were. So therefore, no easy money on that side. And number two, they did not anticipate 25% tariffs, not just on Mexico and Canada. By the way, you know this, George, people have been moving away from China because the 65% tariffs, which are about to be in place here, ever since Trump was in the first administration, they've been moving away from China. Well, these new tariffs are global tariffs for steel, the steel tariffs, right? So it didn't matter if you moved to Malaysia or, Vietnam or name your other Asian country or other South American country to manufacturing things, it's still tariffed. And that wasn't in people's models, right? Why does this matter? Because people, if we one thing is crisis management, but another thing is actually go, hey, we're going to figure out what we're going to do here for the next 3 months. But where can we go going forward? I literally talked with another client who's a publicly traded client, and the same day, this has been a fruitful day, George. and they were literally talking to a Chinese manufacturer that's talking with them about manufacturing in the United States. Think of that.
Yeah.
Would you have ever dreamed that a Chinese manufacturer would come to the U.S. to make goods here 20 years ago?
Absolutely not. Absolutely not.
But these are now decisions that are being made because of the new game. The new game we're in, which is so different, right? And just, let's call it what it is. The tariff is just a massive tax, right? Yeah. It's just a massive tax generating tool. And it's forcing people to rethink how they do things.
Well, and it is forcing. I was going to get into something that would, international relations, of which I'm a geek, but you're absolutely right. And the one thing that we can currently have confidence in is that anything we plan to do inside the borders of the United States is relatively safe and may even see a subsidy, and I use little rabbit ears, in the form of tax breaks, right? And for a long time we've had companies like Apple. Apple just confirmed that they're going to spend $500 million building building manufacturing in Texas, and those are the kinds of things. And that again has less to do with tariffs than it does with other issues out there. But there's a lot more control. I guess the bottom line is there's a lot more control inside the United States. It's a fascinating time. So
yeah, yeah, we could go on and on and on, but let's bring it back to the to the accounting and the strategy part.
Yep.
Is that there's never been a time that is more important to be strategic about your numbers. I do want to take a global step for just a moment here. If it's true, which we're seeing, limited stimulus, we'll just call it. Like we're hoping for interest rates to be flat. We don't expect any real stimulus. We're seeing tax rate, immigration effectively zero, birth rate is near zero. We are in red ocean unless you create your own blue ocean because you strategically figured it out, which means that you have to. You remember One Up on Wall Street by Peter Lynch, for those who remember Mr. Lynch, right? And back in those days, there was this period where you made more money by stock picking the right way. But we know that indexes generally beat stock pickers. But the point was, it required decision-making and skill to be great at stock picking. With AI, with no stimulus, with no growth rate, there are no easy buttons right now, which means that if we aren't being as competitive as possible, we are going to lose money and we are not going to gain market share. And so now more than ever, we need to have strategic beam counters with your team to help make sure that you're going, we're in a different game today. And we better be AI efficient. We better be manufacturing or producing our services in the right places. And we better know what the numbers are. So we are not, because we're beating, and by the way, there's going to be inflation. So we're beating the inflation numbers, right? That's just to tread water, right? Which means that we have to be even better than that to take the next step. And so, folks, if we aren't being strategically the amount of disruption we are already seeing is going to be magnified exponentially over the next 3 years. And if we aren't prepared and you're just waiting for results, I'm concerned. I'm super concerned for small business owners right now who are playing this game, the small and mid-sized business owners. The large companies would have the cash reserves, they're fine. But if you have less than 2 to 6 months of cash in your bank account, you're at significant risk right now.
And what's crazy, this is such a huge opportunity, and I love the fact you started 40 accounting, and now it looks like an especially genius idea. But you started 40 accounting before the election. I mean, this is something you started in 24. You didn't anticipate the level of, frankly, of opportunity that it would create for the election would create for you. The opportunity was there. Let's not skip over this. The baseline opportunity for accounting professionals to increase their revenues, increase their reach and relevance with their business owning clients is that is in that industry, blue ocean. I mean, it's just, if you just ask your clients what they want, they're already telling you. So, and now you layer on top of it the aspects you've just shared, and it's a tremendous time to be able to do so much good for our clients, right?
Oh, it's so exciting, George. I mean, it really is. It's so exciting to here I am. I'm a bean counter, and I'm excited. And it's but it's like that's how I operate. I am so excited by us being able to solve this problem that I started out with. I need a CPA who could look ahead, and that's what we're doing. And we had no idea the amount of we're barely marketing right now. Just the referral, because we're actually saying we're accepting clients. Like that alone is winning us clients. And then you take the next step of like, oh, look at we do budgets, we do forecasting, we do modeling, right? We do the stuff that you're really trying to understand so you can back your gut feel as a business owner.
This episode is brought to you by the Growth Drive Summit. Our theme this year is building a profitable advisory business. Join us in Charleston, South Carolina, October 6th, 7th, and 8th. Expand your network, learn new skills, and generally have a good time. This is a top-rated event. We're looking forward to seeing you there. Thank you.
Right. That's, often I've found this, George, in my years, especially within companies, of that there'd be oftentimes I'd put all these facts together, and the facts were clear, George. They were clear. You need to make a change. And what would happen? We're fine.
We're fine.
It led me to this concept, which is, we need to get the facts together so we can make an emotional decision.
That's interesting.
Emotion drives action. Facts confirm bias. Right? And so it just helps us when we understand it deeper. Then ideally we're going to be better with our emotional decision, because there's hard emotional decision we make. Like I was talking with people today and they're like, they lay off lots of people because of this and not do manufacturing more. Well, I literally was talking to sales, like, we're going to manufacture. I mean, the different decision making, but what's important is you have data and not just gut feel to support these decisions making forward. So then you track against it, right? Like you and I, George, know this because we're in strategy a lot. People will come with a strategy, but they don't. This is why I love Growth Drive. Let's validate the results. Hey, we made this decision to open up a manufacturing firm, do do manufacturing in Mexico, to hire 3 new salespeople. Did you go back and actually validate whether they gave you incremental positive return? Most cases, what do you think, George? How often, what percentage of times do you think even a top-level CEO at a big company, do they go back and validate whether their strategic decisions had a positive ROI?
I would be guessing at the percentage, but here's a gut answer: rarely, right? Or essentially never.
And I think rarely is the right terminology. This is why, once again, PricewaterhouseCoopers says only 2.5% of strategic plans work. It's because, even though there's a common 10% of strategic plans work, the reality is much lower, because very rarely they might say, you might validate that something got done, but you're not validating value got done, right? Oh, yeah. I completed this initiative. Good for you. Did it actually did it add throughput, meaning revenue minus totally variable cost? Did it decrease your operational expense? And did it decrease your inventory? Because if it did the opposite of any one of those 3, it didn't increase your cash flow, folks. And cash flow is what drives businesses.
Oh, you're just going to get an amen from me on that. How often, it's funny. So predictably and sustainably growing free cash flow. A business that is predictably and sustainably growing free cash flow is a killer business. And that is the one thing on which we need to focus. And a lot of CEOs don't even watch free cash flow, right? They're watching a lot of other numbers. These are not stupid people, right?
Oh my gosh, brilliant people, right? Especially when you get involved with like, and once again, there are brilliant people I work with, way smarter than me, and they are. You'll appreciate this, George. And for those listening, you'll adjusted EBITDA. Okay, so just let me digest for once. So people who are like, well, what is this CP3 DOQX whatever? So once again, some of you got this right off the bat, but for those of you who didn't, there's something called EBITDA. EBITDA is earnings before interest, taxes, and depreciation, amortization. The concept behind it is you buy a business, and that's supposed to be equating the free cash flow of the business. Mm-hmm. But then what will happen is we'll pull out adjusted comments because it was quote unquote one time, right? Oh, I had to do this investment here. I had to do this here. I had to do a layoff here, and I don't want to add back severance costs, et cetera, et cetera. And next thing you know, they're operating the business based on adjusted EBITDA. Now, don't get me wrong. If you're able to convince your debt holders of your covenants passed because of adjusted EBITDA, good for you, right? So I'm not saying adjusted EBITDA is bad, but when you are managing your business that you aren't getting to cash flow, you're getting to adjusted EBITDA. Adjusted EBITDA is not cash flow. Matter of fact, it can almost incent you to make decisions because I'm just going to add it back to EBITDA. Right?
Yeah, that's exactly right.
Right. And next thing you know, you're continuously going back to your investors asking for more money. And guess what they do over the long run? They get rid of you. Right. If you don't play that game right. So it's a super fascinating, once again, why am I going down this esoteric? It's because it literally was dealing with us today with the client. And we're talking about their EBITDA and their adjusted EBITDA. And it's like, I literally had the conversation. Yes, of course, we'll do adjusted EBITDA because I understand the matter and they're trying to normalize the future. But let's realize, are we getting free cash flow? Is our cash balances increasing or decreasing, period, as a result of these decisions?
Heck yes. Well, that's exactly the kind of conversation. That's the kind of conversation we should be having with our financial, let's just use the word financial professionals. And so you started 40 accounting. When did you flip the light switch on? Third quarter of last year, beginning of fourth quarter?
Well, no, so I've been doing closet accounting my entire career and through 40 strategy. So I didn't realize it, but people were hiring me because I had a background as a CFO and as a CPA in the past. And so I didn't realize that until afterwards. They'd be like, oh yeah, Carl, you didn't know that? I was like, no. It's like, you talk numbers, Carl. It's just part of your DNA. I was like, oh, thank you. Once again, you don't know what you don't know. Somebody reflects it. So we've been helping out clients with different things, but there's certain things I couldn't do because we weren't an official CPA firm. We couldn't do taxes as an example. We couldn't do certain type of things. We were restricted to doing it. So we wouldn't do the things we couldn't do. And then I would outsource other things. Oh, you need bookkeeping, I'd have somebody else work on those things and things. But what really tipped it off for me, George, was I would have these wonderful strategy discussions. And in the last 3.5 minutes of a 30-minute conversation, I'd bring up the concept of, hey, I'm thinking opening up a CPA firm. What do you think? And they'd be like, can you help me? So
You're hired.
I'd have 26.5 minutes of this brilliant quote unquote strategist guys are like, can you just do my books? They're behind. Can you do my budget? I don't have one. Can you do my taxes? I can't find a CPA that could be strategic with me on our tax strategies. And so that was the big aha before we officially pulled the trigger. And, we went through the process of being an official CPA firm, et cetera, again. But definitely the best decision I had made in last year for sure.
What's interesting, Carl? You're kind of hitting on something that that I see going on, that we all see going on out in the market, which is what are we seeing? We see wealth advisory firms acquiring accounting firms, right? We see management consulting firms acquiring accounting firms, not because they want to have accountants on board, but the kind of the harsh reality is because they see accounting as a commodity and as a cherry on top that they can add management consultants for their reason, wealth advisors for theirs, but it becomes this value add service like, oh yeah, we do that. So where accountants have talked long and hard about, and we just went through for the last decade, we went from we're accountants and advisors. Hey, we're advisors and accountants. And you see these logos, and it's not a game. I mean, these are bona fide people having sat in the room with, I don't know how many managing partners of CPA firms. And I will say it again, and you already know this, the number that have actually gotten into strategic planning, strategic execution, having a strategic role is zero. Zero, right. Even with the managing partner pounding his fist on the table, I'm not making this up, and nothing happened for a variety of reasons. So you're coming in and telling the world, hey man, you can better serve your clients, grow your firm, increase your reach and relevance, which I've said until my tongue's bleeding. And I love to hear that you're successful, and you've only recently officially turned the lights on.
Yeah, it's super exciting. I mean, we're as I said, people are firing their clients. They're charging way too much for their fees because they can. And I see the long game of fees declining over the long run, right? I do see AI, I do see offshoring continue to put pressure on the long-term pricing. There's this problem between of gobbling up of accounting firms right now. And so the clients are being squeezed. Like always, I love PE. I work with PE a lot, but they're killing customer service. And so as a result of that, because it comes down to their numbers and how much money you make on an hourly basis, like, no, at the end of the day, we gotta provide our client service. We gotta provide what they want, not what we want.
Oh, it's going to be interesting to see how that pendulum swings back.
Yeah. Well, it's George, this is why we're keeping our pricing fair, very fair. And actually, maybe even a little bit below market fair. It's because I believe this trend is going to happen of pricing pressure going down, and the larger firms are not going to know what to do. And even the mid-sized firms are not going to know what to do because they have these massive pensions they have to pay out for their partners. Yeah. Right. And so we're, once again, I told you, we're building this up the right way with a very low cost structure, with a combination of onshore and offshore talent, so we can be wildly competitive in the long run. So we're not overpricing and all of a sudden have to skip back and say, whoa. We're not going to do that. And the other thing too, just a little side note, is even though it's tempting to do wealth management, very tempting, very, very tempting, we're going to intentionally keep an iron curtain on that for as long as we can. The reason is these same wealth management firms that are really good, and the ones who don't have CPA firms, if we have an investment thing, they're not going to refer us clients anymore.
That's a fact.
Yeah. Right. So it's a big world. It's a really big world. It's 33 plus ish, the 34 million to small businesses. And there's a lot of massive, the amount of advisors out there are massive, right? We literally, if we decide to just hang our shingle and say we are doing this underneath our 40 umbrella in the near term, we will all of a sudden lose a ton of referrals. And so we've made a decision of like, hey, we're iron curtaining that, and we're going to try to be smart, if that makes sense, with that type of stuff, and recognize, hey, where there's really differentiation and partnering with right people, because we can't be all things great. Now maybe long run, once again, you never say never. I'm never going to say never, but in the foreseeable future, we're going to be as smart as we can. We have partner relationships with a ton of people, and we want to reciprocate value, so we can then, and the same thing, by the way, in the reverse side, not all investors. I love my wealth management friends, but they have different, just like their CPAs have different value, there's investment value, different value, where they provide different value. They have different cultures. I want to provide my clients the best recommendation to go to the right group of people to suggest to, rather than just saying you just have to go to one person. I might recommend a little stronger somebody else based on the things, but I want them to make the best decisions.
Absolutely. You know, something, I don't know what you just said that triggered this question, but is your strategic work, so you're using Growth Drive and Clarity with your clients, thank you.
Yeah,
Thank you
absolutely.
very much. And I love working with you, as you know. Do you anticipate, or are you already, is the Clarity analysis, this analysis of strategic capacity, uncovering, getting your clients to put their hands up and say, hey, I think I could use some more sophistication here, or better budgeting, et cetera?
Yeah, it's funny. One of my very first Growth Drive experiences when we started using in 24 was talk with the client. We're like, do you recognize your CFO potentially is adding $1 million to your business? Right, because of Growth Drive, like the data showed it validated that the investment was worth it if they can sell it, growing once again the intrinsic value, right, growing the multiple of the business because of that value was there. So, anyways, interesting, right? When you look at it from that perspective, we today put all of our strategy clients through Growth Drive, and it's a game changer for us because we're not only identifying the other things, but it also incorporates well with the financial side. Oh, you aren't closing your books on time. Oh, you don't have financial reporting and controls documentation. Oh, what? You don't know what you don't know what a cash flow statement is. It's like, those are things that are easy things for us, our firm, for the accounting, right, to fix, right, our sister company. And so it does cross over really well. And then, of course, we have a whole set of outside partners where we can't fix the whole world's problems, but we identify them and go, Growth Drive identified this. Let's partner or work together with somebody else to help make sure that we're going to help implement this for you. It's really powerful for us. It's it really, once again, what I love about it so much is because not only is it a great tool and all the information, but it's data driven and you can provide an ROI, right? Hey, you work on this thing and you have the potential to increase the value of your company by Y, 3X. So it's now I feel comfortable guaranteeing my business because I can validate by working on something it's actually going to provide a positive return on investment. Very few people are willing to say those type of things.
Mm-hmm. I love that. Yeah. It makes me, I also, it gives us a lot of, I feel the accountability on our end. And yeah, it's fun. It's interesting. When we divide the 24 growth driving objectives among the four major executive functions, right? The CEO, the CFO, the chief operating officer, and chief revenue officer. Between the CEO and the CFO, they have 14 of the 24. They have, the lion's share between those two in terms of maximizing the value of the business. And critically important, man. I love it. It's hard to believe we've been chatting for almost 40 minutes, Carl. Are there any, we can do this every week, right? And anything else that you're finding coming out of your renewed foray into accounting that you found surprising, or that your clients are especially loving?
Yeah, well, and I apologize. I got about 2 minutes left here, George. But let me just say something that's been really surprising from my perspective. And I could say this for our team as well. What I've loved about getting back into accounting, the geek stuff of accounting, is you can provide an answer. It's there. Now, I love the gray of accounting, which is kind of weird for me to say that, but there's judgment. What that means is that there's judgment in looking ahead to do forecasts or doing budgeting and actuals. I'm like, should we really put this in different areas? But what I love is we can, when a client gets their tax return done, or when a client sees the result of their model and they have confidence it's done, there is such an appreciation. It helps people sleep better at night.
Yes.
And I've been enjoying that immediate gratification that we don't typically get in the strategy side. The strategy side, you have this initial excitement of the plan. The value is when we start working with them to get it done, right?
Get it done. Yeah.
And so for me, I found is that I love being back in the accounting business because of that. Like it wins, those short-term wins versus the long-term wins we get in the strategy side. So it's been really fun, and I'm so glad to be back. And I never thought I would say that, George.
Awesome. Awesome, man. It's funny. Well, I never talk about being a lawyer either. So, well, Carl, man, congratulations. And thanks a lot for this conversation. I love it. And it's going to be fun to watch what you get going on. So
thank you so much, George. It's been great talking to you. Thanks so much to your audience. And gotta head out. But once again, have a great day. And once again, anyone want to reach out, connect directly, I should just say that. Feel free to reach out to, you can go to 40accounting.com, or you can reach out and send an email to carljcox@40accounting.com.
Awesome, Carl. Thanks, man. I appreciate your time. You have a great afternoon.
Thank you. You too. Bye-bye.
Hi, this is George. Thanks for listening. If you like what you heard, you can subscribe, like, and please take 2 seconds to leave a review. It tells the world that you like what we're doing, and it helps us understand how we can improve the show. Thank you, and see you next time.